Today is a very important day in the history of XRP. A lot of people have thought for a long time that XRP would be named a Tier 1 reserve currency. Now, what is thought to be a secret order from the International Monetary Fund has proven it. There is more than one reason for member central banks to put at least 1% of their national reserves into XRP right away. It's being sold as an order. Is this true? There is real hope here if it does hold. It's the rule everywhere. Things change. The paper that is going around is meant to be scary, dramatic, and exciting. A reserve asset, an XRP allocation mandate, a liquidity crisis contingency, and Tier 1 asset classification are some of the things that stand out. It looks like an official structure. There's an IMF seal, blacked out text, and numbers that look like they belong on a government document. There are parts that look fuzzy and parts that look almost too clear. A lot of people have different ideas. Different people have different ideas about whether it's real or not. Some people think that the early release is the real plan. There's a lot of talk in the financial, economic, and cryptocurrency worlds about the idea that the IMF might tell central banks, what does it mean for an object to be a Tier 1 reserve? The things that national banks hold to keep their economies stable are generally reserve assets. Gold, foreign currencies like the US dollar and the euro, and sometimes SDRs from the IMF. They are used for international trade and to back up government debt during disasters. For the IMF to adding XRP to that list means they know about its ease of use, safety, compliance with rules, and acceptance around the world. A few years ago, many people would have thought all of these things were impossible. These words show that XRP has gained a level of official acceptance and institutional trust in its technology that not many other cryptocurrencies have. A record amount of people will want to buy XRP if central banks are forced to invest % of their savings in it. Take a look at how much money the central banks of the world have saved in other countries. Not even 1% of it's possible that much is worth a lot of money. This is not a small amount of demand, it's huge. And there are only 100 billion XRP tokens in circulation. So when hundreds of billions of dollars are put into XRP, a lot of the stock that is in daily markets is taken away. That almost always causes a supply shock, which pushes prices past any limits that are in place. There are, of course, questions. Who let the paper out? What does the leak say? Is it possible for the IMF to make a written order rather than just an idea? What problems do central banks face with the law when they try to move some of their money to cryptocurrency? On top of that, what rules do different places have for XRP, security laws, fighting money laundering, taxes, and filing, especially for government agencies? We hide our faces and brush these off as not important at all, but the question itself is part of the message right now. To be honest, the markets are acting as if this were at least partly true. It's okay to do this because the IMF and central banks have done it before. Investing in non-traditional ways as they have been added to reserve holdings before, but not as often or in such a big way over time. Some strange things started to become important. There may have been a lot of smaller steps that led to this point, like when XRP was first used to send money across countries, when rules became clearer in many major areas, and when big organizations already knew about crypto or blockchain technology. The paper could make public what's been going on behind closed doors, whether it's completely final or just a sign. If central banks bought this much crypto, it would be much bigger than any other crypto bull run. In the past, whales, VCs, hedge funds, and regular buyers all changed the price. People who work for sovereign entities, public funds, and reserve managers won't dump or panic because of their size, their legal weight, and the fact that they have to be inspected and kept safe. The price of XRP might be more steady after the shock is over, but you know that the first few minutes will be very unstable and crazy. The supply math is pretty hard to beat if this order stays in place. Ripple is keeping a lot of the 100 billion XRP for the long run. Early investors, companies that work with ecosystems in strategic areas, take those away. Between 50 and 70% is frozen or liquid for a long time. If the central banks with the most reserves all try to give away at least 1%, they will be fighting for the easy to trade part. The costs will keep rising. A lot of money will need to be moved around, and slippage will be very bad. It will be hard for exchanges. Market prices will change a great deal. Goals for prices that seemed too high before will now seem very fair. Early on, some experts thought that the numbers that were coming in would be crazy. But in this case, about $10 is a place to begin. $50 on XRP is possible, and people are talking about amounts between $100 and $500 on XRP. That will depend on how quickly people start using the technology, if it is allowed by the government, how well it works all over the world, and how many transactions take place between countries. We have to think that central banks will want custody, auditing, and insurance that are at the level of an organization. This changes that the less liquid the supply chain is, the more tension there is, and the higher prices go. Besides that, this would have effects that would reach different kinds of assets. Reserve managers may be less exposed to standard reserve assets if they invest their money in XRP instead of gold. US stocks or euro-denominated bonds, there might be less need for those and prices might change. In the bond market, the dollar, the national debt market, and the foreign exchange market, you name it, things might change. If big central banks sell USD slowly, if people move assets worth dollars instead of XP, the dollar may lose some of its power. Really, it has huge effects on world power. Also, think about how this order fits into a bigger story. Worldwide issue with cash flow. Big economies are being warned about inflation and growing debt loads. K-banks and the IMF might see XRP as a way to keep the system safe. This fits with what we've said before about how inflation could hurt national credit and make currencies worth less. In other words, to put it another way, XRP isn't just a guess. States do this to keep their ability to buy things. You pay off other countries' bills, help settle trade, and spread your reserve risk across more than one currency or economic bloc. A lot of law and technical tools are needed for this change to take place. Central banks will need to keep records in an open and honest way and make sure they money laundering and know your customer rules. In some places, you might also need new rules. Ripple and its environment will be under a lot of stress. Partners to make sure protection, speed, stability, and the ability to grow. There will need to be audits, proof of funds, and ways to prove things on the blockchain because they don't want to take chances or because their own rules make them move more slowly. But if they follow the order, they will have to move faster. People in the neighborhood are already responding. There are a lot of investors who see this as proof in XRP, focus groups on social media, and on pump and dump watch lists. People who believe in XRP believe that this leak is what they thought would happen came to an end. For them, this was the end of all the partnerships, court victories, clear rules, and company adoption. It looks like big businesses are finally doing what normal people have been doing for years. They plan to keep XRP for a long time because they think it is useful. But we need to be careful of fantasy. Every leak doesn't become a rule, and you don't have to follow every order. Resistance from politicians, regulators, and laws in the country may slow down or weaken performance. Some governments may not agree with what is said or may change it, and some central banks may not care or wait. There are many things that could go wrong, such as infrastructure failure, hacks, custodian issues, court battles, geopolitical pressures, and lobbying by competing assets. All of these to be weighed. Things could move really quickly or really slowly when it comes to time. It sounds like the money is being sent right away because of the leak, but central banks are usually slow, careful, and full of red tape. A lot of central banks may say what they are going to do, but it might not happen for months or even years to finish it. And most of the time,